Money, power, control. For centuries, a shadowy web of bankers, kings, and elites has shaped the fate of nations, while the rest of us pay the price. This is the untold story of banking, a tale of genius, greed, and global domination. Strap in. By the end, you'll never look at your wallet the same way again. Our story begins in 15th century Florence, Italy. Enter the Medici family, wool merchants turned financial warlords. Giovanni de' Medici, a shrewd trader, noticed a problem. Merchants struggled to exchange foreign coins. His solution? Open the first bank, from banca, Italian for bench, where money changers worked. But the Medici didn't just exchange coins. They invented double-entry bookkeeping, tracking debts and credits in parallel columns. Suddenly they could lend to popes, fund wars, and manipulate kings. Cosimo de' Medici, Giovanni's son, became the godfather of banking, bribing cardinals to make his friend Pope Pius II. By 1450, the Medici controlled Europe's purse strings until their own greed destroyed them. They funded both sides of wars, charged 40% interest, and even bankrolled Michelangelo. But when they overextended, their debtors revolted. In 1494, the family was exiled, their banks collapsed, and the first lesson of banking was learned: too much power breeds downfall. Before the Medici, there were the Knights Templar, monk warriors turned financial pioneers. Crusaders needed safe passage to Jerusalem, so the Templars created letters of credit: deposit gold in Paris, withdraw it in Acre. They became the world's first international bankers, and the richest organization on earth. But kings grew jealous. In 1307, Francis Philip IV, drowning in debt to the Templars, ordered their arrest. Thousands were tortured, burned as heretics. Their treasure vanished. Legends say it's buried in Rosslyn Chapel, or funding secret societies today. The Templars' fate taught bankers a dark truth. When you owe the bank millions, the bank owns you. When you owe the bank billions, you own the bank. Fast forward to 1815. The Rothschilds, a Jewish family in Frankfurt, mastered a new weapon: information. Nathan Rothschild used carrier pigeons to learn of Napoleon's defeat at Waterloo before the British government. He then pulled off history's greatest insider trade, buying bonds cheap, selling high, and netting $1.2 billion in today's money. The Rothschilds built a banking empire across Europe, funding railroads, wars, and empires. Their motto: give me control of a nation's money and I care not who makes its laws. By 1850, they were the richest family in history, and the blueprint for modern central banking. December 1910. 6 men boarded a secret train to Jekyll Island, Georgia. Their mission? Design a central bank for America. Among them, bankers J.P. Morgan, John D. Rockefeller, and Senator Nelson Aldrich. The result? The Federal Reserve Act of 1913, a private bank with public power. Here's how it works. The Fed prints money. Literally, it orders bills from the Bureau of Engraving. It sets interest rates, buys government debt, and lends to banks. But critics like Henry Ford raged, it is well enough that people of the nation do not understand our banking system. For if they did, there'd be a revolution before tomorrow morning. Banks use fractional reserve banking. Lend out 90% of deposits, keeping 10% as reserves. The Fed controls this ratio, tightening or loosening the money supply. But when confidence collapses. 1907. A stock market crash triggered mass withdrawals. Banks folded. Entered J.P. Morgan, America's de facto central banker. He locked rival bankers in his library, forced them to pledge $25 million to save the system. The lesson? Bankers, not governments, held the real power. 1929. The Fed raised rates, strangling the economy. Banks hoarded gold. 9,000 banks failed. Meanwhile, the elite shorted stocks. As FDR later admitted, the real truth is, a financial element has owned the government since the days of Andrew Jackson. 2008. Banks bet on toxic subprime loans. When they failed, the Fed printed $16 trillion in secret loans to save them. CEO bonuses soared, millions lost homes. As one trader laughed on tape, the system is rigged, always has been. Today, banking is a $130 trillion game. The Fed, ECB, and IMF pull the strings. But a new war is brewing. Cryptocurrencies like Bitcoin threaten their monopoly. In response, governments are rolling out CBDCs, central bank digital currencies. Programmable money that can expire, track your spending, even freeze dissenters' accounts. Henry Ford once dreamed of a currency without banks backed by energy, not debt. Will crypto fulfill his vision? Or will CBDCs become the ultimate tool of control? The answer lies in the shadows, where bankers and revolutionaries still clash. For 600 years, banking has been a cycle of rise, ruin, and reinvention. But the greatest secret? You are the collateral. Your labor, your debt, your data, all fuel the machine. The question is, Will we break the cycle, or become its next victims? Subscribe now. Next week, how to escape the banking matrix.